Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining us. On tonight's program, Paul Rickard and I are going to look at the week ahead with interest rate cuts, especially in the USA. Could this lead to a big surge in the market, particularly if the rate cut is bigger than expected? And then we'll look at some interesting stocks that we're thinking are looking viable at this point in time. And then I'm going to talk to a guy by the name of Mark Cooksley, CEO of a small mining company called ABX. Interesting company, 3 different profit centers. I guess the main reason why I want to talk to them is they're in rare earths. And they went for a big spike last week. But the spike hasn't continued. But I just thought it was a fairly interesting company to discuss. And finally, Luke Hopewell will explain why Telstra's being nice to people in houses. That's coming up later in the show. So without any further ado, let me introduce Paul Rickard of the Switzer Report. Thanks for joining us, Paul.
Thanks, Pete.
Big week.
A big week with the US Fed Reserve headline hit on the in the early hours of Thursday morning. Yeah, look, I think widely expected to cut by 0.25%, but it could be more.
Yeah, if it's a jumbo cut, as they call it, 50 basis point, I think the market would really like it on one hand before they start worrying about recession.
Yeah, I mean, look, I don't think the chances are high for 50 basis points. I think the market expects 25, and then they'll look at the statement closely in the press conference that Jerome Powell will give.
That's the big one.
That would be what.
And so for us, if it was 25 basis points, I would expect our market will follow whatever Wall Street does. So they're happy with that. We'll be happy with that.
Yeah, I mean, I think it also give a little bit more support to the IBRD. So 25 basis points and let's say a dovish statement. I think that would be good for our market, good for the US follow-on hit. 25 basis points is a bit of will depend on the data. Nice. Maybe a little sell from the US, but a 50 basis point cut, the market would love it.
I'm looking forward to Donald Trump's reaction to a 25 basis cut. He knows he wants a 50 basis.
He wants a 50 basis. So but I don't think there's going to be too much thanks to Jerome Powell after the meeting from President Trump.
And I hate to admit this, but I guess if you're objective, Trump seemingly knows more about the US economy than Jerome Powell, because Powell wasn't expecting that 900,000 jobs revision.
Yeah.
And, Trump was so certain there was something going on, he even stuck his statistician. So it is always hard working out an economy, but this economy is a lot slower than people expect.
Well, I think Trump's not necessarily concerned about unemployment. Of course, it's never been better in the US, right? Employment. The economy's never been strong, but I think what he's concerned about, his reason for wanting such lower interest rates, is more about A, to help US businesses and US manufacturing, and B, why we're paying all this money away when people invest here any can't. It's more about sort of making America great, continuing to make America great, if you believe those words, rather than because it's slowing. You're not been with the economy slow.
No. And also a lower dollar makes Americans buy America.
Yeah, a lower dollar. That's probably the key point of
it makes you buy America. Yeah. Las Vegas looks really appealing if London looks so expensive because the pound's up and the US dollar down.
Yeah. So I think that's would be his argument, has been his argument from day one. So it's about the dollar, it's about manufacturing. It's about making sure the US is competitive with the rest of the world.
Yeah, and the irony is a whole lot of people who haven't been going to America might start saying, America is becoming cheaper again. Not even greater again, but cheaper again. But like our currencies now are over 66, and probably by the end of the year we could be, 68, and we're going ahead to 70. So all this sort of stuff is ultimately good for the US bottom line.
Good for the US bottom line. I mean, look, lower interest rates doesn't hurt anybody. Maybe a few savers aren't happy. Positive savers, a few others aren't that happy, but it doesn't hurt anybody else. And that's sort of spoiled. That's why our market is not giving up at the moment, because we're sort of held by as a prospect of lower rates here. We're following the lower rates in the US. And the markets are pretty strong.
Do you care, Paul, what UK, Japan, and Canada does? I know Luke, our producer, thought it might be interesting, but even the market cares about this.
Look, I guess this is Fred. I mean, so we've got Canada this week as well. which is expected
I
to.
love tornadoes, but they don't be
I don't really care. It doesn't matter. Actually, the UK leads central bank, I think, meets on the 18th of September and probably won't cut rates.
Japan's way more intense.
It's probably more important. So, look, we were asked to talk about rates, and yeah, I don't really care. It's the US.
Yeah, they're the main game in town, and we pay for all of it. So on that point there, if you've got cash on the side, it's really going to test you. Are you going to put the money to work before the interest rate decision, or are you going to do it after?
Look, I always tend to sort of view that a lot of these things get built in beforehand. So I would probably be
Buy the rumor, sell the fact?
Yeah, I probably would not be investing now in the market because I think some of it's priced in. I would be putting my money into, if I wanted to keep some cash, I would be locking it away in longer term deposits out to about 12 months, not longer. Maybe you stay 6 months or something, but 12 months looks okay. On the risk that there's a jumbo cut, if it's a jumbo cut in the US, our market will rally.
Yeah,
So, yeah, you got to weigh up, as I said, go back to the three scenarios. The scenario 4 of no rate cut in the US is not going to happen.
right.
So it's either 25 basis points with a fairly subdued statement, 25 basis points.
It might do all like, it'll go like on that.
Well, 25 basis points, and maybe it'll depend. The next one depends on the data.
Yeah, that's what I say. And it's a statement.
Yeah. Oh, well, hang on. Three options. The first one is subdued. That is not as dovish as you might hope, right? In other words, 25 basis points. We're not going to commit to any more with people on data sign, right? Market or sell.
That's what Jerome Powell says all the time. Yeah.
Okay. 25 basis points and a more dovish statement, that is, basically implies it's going to cut again at the next meeting. Market will go rally, or 50 basis points, market will go.
So we're talking about what you're doing. Answer nothing. I actually do want to put money to work before the decision. I've got a funny feeling that statements going to have to be very positive because effectively Jerome's got it wrong. And I think he's been a pretty good central banker, but you get this, and central bankers always get it wrong at this tricky point, don't they? That's why Kenny always says they're always late to the party. I think I'm not going to invest in anything risky. If it's stuff that I want to hold anyway, if this market keeps going down, it's down today, it's down tomorrow or Wednesday, I'll put a bit of money to work on Wednesday on the basis of the thereabouts. But I won't be doing anything that will be a potential loser. I'm not going to buy tech now. Even though the tech will be beneficiary, I think, if rates are coming down. That's a truism, isn't it? The tech and growth stocks do well, we might come down. There'll be more, like the X20s, the VASs, the ISVs, this sort of stuff.
I find it really hard. It is hard playing individual stocks at the moment. Yeah, because the big stocks look so expensive, but don't seem to want to get sold off. I think, you can, as you say, always just play it for the indices at the moment.
Well, I don't like doing that, but when there's no perceived value, and a lot of the small cap stocks I like Zip and like Tyro and MP1, they've gone up, so I don't want to load into them as well. So the ETFs make a lot of sense at this point in time. Paul, have you come across a stock this week that you thought, hey, this looks a bit better than I thought?
Well, I had a close look at Ramsey. You can read all about my thoughts on Ramsey. And I know that I'm not prepared to say it's a buy. I still think if he's in a disappointing category. Best thing Ramsey could do, Pete, is spin off their European business. Herx is Ramsey Santé. It's the main part of the business.
It's mainly France.
It's France, but it's also Sweden and the Netherlands, and Sweden, Denmark, and I think the third one is Norway. So largely France, but that would be the best thing they could do. What's interesting, you look at their different businesses, is just the margins, and which is a good indication of how profitable it is. Otherwise, the difference between, revenue and expenses is what the business actually makes per dollar of revenue spent, right? In Australia, the margin's about 11%. In France, it's about 2%. In the UK, it's about 8%. And so, you can understand why investors say, what the hell did we buy all this stuff offshore for when we were getting a much better margin?
Did they do it when Paul Ramsey was all right?
I think did a lot of with Paul Ramsey, but and for a while, Ramsey were world beaters in this here, right? In globally, right? They were considered to be a really top. COVID isn't really. COVID's been hard, and a lot of the recovery. Everyone expected that post COVID, a huge pickup in admissions and so forth. That started to pick up of what people forgot about is all the costs have gone up. So, all the nurses, we all love nurses, right? Now, all we get paid a lot more. There's been big pay increases at all the staff. Ratios have come down. In other words, you need, nurses are now going to treat so many patients, so you're going to have more staff, and all the equipment's more expensive. So, and government's not having as being as generous. In other words, and particularly in Australia's case, the health insurers have really been paid high for. So it's been pretty tough for a hospital operator. So a lot of people said, okay, we understand COVID is going to be really tough. They'll recover. And really, they've struggled, as you can see by Ramsey's made and the health scope. And the problems, they can't themselves. They can't themselves. So it is a tough business. I think if Ramsey was to dial back mainly to Australia, the market would say that's a good step. Get us another stuff, and that would get the actual profitability up of the organisation. But like all those organisations where you put a lot of capital offshore, it's always hard to admit that, maybe you got a role. And then if you're sort of the dominant player in Australia, how do you grow that? That's the hard part.
Now, my story today for the Switzer report is, not a sensational story. It's just about the 7 sexy stocks that you should invest in. I thought sexy might work.
I thought I like the alliteration, Peter, and the titles.
So I work. Get a gratuitous. Is that? But the three I had no problem backing. The other ones are a little more questionable. But all the analysts like them. But to me, NextDC, Xero, and WiseTech. Now, WiseTech's a bit tricky, but it's still a very good business. And there seems to be so much upside as the analysts are right. Do you have any question marks over any of those or all of those?
No, look, I mean, WiseTech, my only question mark is now some funds won't buy it. But I think, they'll forgive it. They'll forgive it. So all the others will, right? So I think you can put that to one side. Xero's got to prove itself in America, and that could take longer than people expect. So there's no doubt it's got huge pricing power in Australasia, and it'll be able to keep on putting its prices up and supporting its US expansion. But it is taking on Intuit. Intuit's got something like a 90+% market share. Right, and that's hard. So it has been. It's not new to America. It's been there 6-7 years already, right? So it's slow going. It's such big acquisition to help it get going. So it's got to prove itself to America. NextDC, I think, is a great company. I just worry about that it gets caught up in the hype of data centers. So everyone wants to get a data center. There's another one comes around and raises capital immediately. That means that investors say, okay, there's a new one to invest in. So I'll just sort of reduce my holdings a little bit in the NextDC. So I think you've seen that a couple of times, but I think it's a pretty good business.
It seems to me all three of those have periods of time when the market's suspicious of them. NextDC had capital raise, share price went down, didn't they?
Yeah, and also because I think there's supposed to be so many others good. When a lot of others have come to market. You got to think like an investor. You can like data centers. You got so much to invest. If it's a new one, well, where does the money for that come from?
Yeah.
More often it comes down to,
as you always say, buy the best in the market. NextDC is the best in the market. Right, next line. Xero went and bought something, and there's a big outlay. But Xero's got a good track record, so I like that. And WiseTech, I think the government's things will eventually settle down. I think Richard will behave himself, and the company. What I read from the analyst was they liked the future of the company and the business but they bought something as well, didn't it? A new business. Directly out of potential. But usually when companies do these big outlays, there can be a temporary backward step.
Yeah, full of that.
Very much so. Yep. Okay, well, I've offered 3 interesting ones. You gave us, Ramsey, but
what were your other 4? I just what we're talking.
No, we don't be. All right. Well, 2 of them were,
do you have to go
pharmaceuticals? Yeah. Telex and Neuron, right? Big interest in those. And the other were 2 boring ones. I was thinking about you when I did it, Paul. Woolworths I think the market dashed them up. I think
It's been a bit harder, Woolworths.
and as there's a downturn in the market, people will buy Woolworths and Coles and all that stuff. And SiteMinder. SiteMinder.
I read some good things about SiteMinder. Come back to Woolworths. I sort of, a couple of years ago, I sort of went cold on Woolworths and thought Coles was the go.
Yeah, they did.
But I did the sort of reverse about a bit too early. And if you look at this year, Coles has continued to outperform Woolworths. The question is that about to turn back again? I'm not sure it is, Pete. I think Coles has made a lot more. It takes time, but I guess maybe the clue for Woolworths is when you start to see those comparison reported sales figures, and Woolworths is edging back, we're getting close to Coles. I think you could probably say that the Woolworths may have turned the corner.
Yeah. Well, I know you're very, very unfair towards Big W, and I saw a uber cool ad for Big W, very well dressed lady of a younger inclination, and the title was "I got it at Big W," and I think that's going to really work. So it turned out
Well, you're one of the few people I know who's gone to the Big W store. So I'm went from one of his very loyal customers, and they're even at a Switzer.
Yeah, okay. That's Paul Rickard on the Switch Report. If you want to know more about what Paul's written and I've written, you're going to have to be a subscriber to the Switch Report. And that was Paul Rickard on the Switch Report. Now let's catch up with Mark Cooksley, who's the CEO of a company called ABX. Thanks for joining us, Mark.
Great to be with you again, Peter.
Yeah. So, Mark, we did talk a few months ago, and I was curious about a company called ABX, which of course you're the CEO of. And last week or the week before, it went for a bit of a spike. The share price went up. I have to confess, I missed the spike, and I have got a very small holding in ABX, primarily because a mate of mine is on the board. He's always talking about the future of it. But I want to test out his belief in the company by talking to you. Our viewers have never heard of ABX. Tell us what you guys do, because you're in a number of areas, aren't you?
Yeah, that's right. Although we're a small company, we've got three really compelling projects. So the first of those is bauxite, where we started. So we've got some good bauxite resources Eastern Australia, and we just signed up a strategic investor last week. Then we got rare earths, which led to the share price spike last week. Again, we've got a really compelling rare earth resource in Tasmania that's got global interest. And the third area is a new technology we're developing, a world leader to produce clean fluorine chemicals from a industrial waste. So three really compelling projects, each on their own. And the fact that we've got all three of them together gives us even more strength.
Yeah, the last time I spoke to you, we were talking about this link you're going to have with Rio Tinto. Has that gone ahead, or is it in train?
Yeah, we're working with Rio Tinto on this clean fluorine chemical project. So we take a waste from aluminium smelters, which are in this case Rio Tinto, and we have a technology to reprocess it back into industrial chemicals, one of which aluminium smelters like Rio Tinto use. And Rio Tinto is actually leasing us a facility at below market rates next to their smelter in Tasmania. So it's a very close, that's to the power plant. So it's a very close partnership.
When do you suspect that activity will be profitable for the company?
So we're focusing on the pilot plant right now. That's really till the middle of next year. And then we expect the pilot plant to go well from all the work we've done earlier. And we'll be looking at building a commercial plant thereafter, which that's a sort of a 12-month process. So we're talking a couple of years so we could look at being profitable and generating profit for the company.
Yeah. Okay. So that's just one thing. Now, of course, the sexiest issue that you're involved in is rare earths, and Donald Trump has made rare earths even more compelling a story. And I think the calculations I've seen Foster produce maybe think, well, maybe you guys have a bit of a future with rare earths. But tell us what you see as your current position with rare earths and what you think the calculated value of your deposits would be.
Yeah, so we think we're in a really compelling position globally. So first of all, rare earth demand is going up, clearly, because of the renewable economy. And there's two particular heavy rare earths that are in most demand or more, have the most acute supply constraints. They're almost totally supplied out of China. And these two particular rare earths, dysprosium and terbium, are also not commonly found or in very low levels in most rare earth deposits. So our deposit has a higher level, a higher proportion of those two rare earths. And the other strength of our deposit is the metallurgy is really good, which means you basically what you've got in the ground, you can get out at relatively low cost. So, and the fact that we're in Australia, as far as we can work out, no other company in the world has that combination of those three features. And that is proving the case when we talk to potential global customers in the US and Europe. They go, yes, we understand. You guys are different in a good way.
Right. So let's be really basic. So when is your difference going to translate into revenue and profit?
Well, it's sort of in similar timeframes to the clean fluorine chemicals. We're talking, potentially 2 or 3 years. So we've already established we've got a resource. There's potential to make that resource larger, but customers are keen, for product very soon. People are trying to build capacity through this supply chain. It's all very well to say, well, so-and-so is going to produce a magnet that goes in an electric motor, but in the end, you need feed for that, right back up the chain. And that's what we potentially can supply. So we've got people through the value chain very interested in helping us advance quickly. So we're doing the metallurgical work and the economic studies to say, okay, what is this project actually going to look like? How much will it cost to build? And how long will it take? How we get approvals? And so we're advancing that quite rapidly at the moment.
I know the Sydney Morning Herald did a story on you guys on the week that you spied. Do you think the market and the media in particular that often is the channel through which information about small companies like yours, that information travels through the media, do you think the media fully understands the potential of the company?
No, basically. I think
it's not unusual. There are plenty of small mining companies in exactly the same sort of situation as you. But you obviously, being CEO, you would be frustrated that they're not seeing it. But okay.
frustrated partially, but the world's a complex place, so it's okay. So, and bauxite, I guess that's reasonably easy for people to understand. People, bauxite's been around a long time, so that people get a handle on that. Rare earths, a bit more common, but it's still pretty new, and so there's a lot more confusion in the market, and I mean, in a broad sense, whether that's the media or investors or even companies in the value chain, they're all trying to get their head around it. So it's hard. Well, it can be hard for people to understand why one opportunity is better than another. We genuinely believe ours is very attractive, and a lot of people agree with that. Not everyone understands that. And then the clean fluorine chemicals, again, it's a bit different. So we recognize that there's some people it can be a bit hard to understand. That doesn't change the fact that they're all really good projects, and we think that the proof will be in the pudding, basically.
Is there any opportunity for government support? We know the federal government's been backing critical minerals and rare earths. Are you a possible candidate for support from government?
Yes, and more than that, we've had government support for the clean fluorine chemical projects out of sort of it's a recycling fund. That first grant's coming to an end, but we're applying for a new grant to go to the next stage. And certainly on the rare earths, the critical minerals is very highly recognised within the government as being important, and rare earths is a prime case. So, yeah, we have lots of discussions with government, both federal and state, about support, and very positive response.
Yeah. Does the various or the three major activities that you have, is there a lot of cash burned in those activities, or And how would you assess your current cash situation?
I think one of our strengths actually is we've managed to advance all three projects with relatively low cash expenditure. I think we've done extremely well over several years to do that. The bauxite is largely addressed now. So just last week we announced a strategic investment that we've executed the agreements with a private Australian company. Just got to get final shareholder approval or ASX waiver, and that will potentially bring in $5.4 million to help develop the bauxite project in Queensland. Rare earths, we're pretty good at the moment, and with the clean fluorine chemicals, I guess we do have some more expenditure in the next 6 to 12 months on the pilot plant. So we're not too bad, but still always looking for further investment. But we've done incredibly well, I think, to advance the projects to the stage we have whilst minimising expenditure.
One, the market respond positively to the company a week ago. What was the catalyst for that positivity?
We're pretty sure it was rare earths. We did it. We did an ASX announcement in the morning, and the share price doubled within half an hour or so of opening. Yeah. So we think the key thing was that the market recognising that, like I said, ABX is really in a unique position globally with a lot of heavy rare earths, good metallurgy, and being in Australia. And we think that the market actually had some recognition of that. We've been saying it for a while, but sometimes you've got to repeat the message a lot for it to get through. And we think it got through on that day.
Okay. Is there anything else you think the market needs to know about this company and its future?
Just to re-emphasize that all three projects are really compelling and attractive. If we only had one of them, it would be a good company. We've got three. So we think all three will succeed, but even in the worst case that one doesn't or takes longer, we've still got two really good other ones. So it's a really good investment. You're backing three really good horses. It gives you pretty good odds.
Okay. One last question. It's a tough one. Let's imagine your mum or dad came to you and said, "Mark, if I invest in this company, how long do you reckon before we start making some real money?" What would you say to them?
I'd be saying a few years, a small number of years. Then we've got a really good shot of generating a significant return.
And of course, you'd never lie to your mum and dad, would you?
Of course, that's right.
Mark, thanks for joining us. And there's Mark Cooksley of ABX. And now Luke Hopewell is going to look at why Telstra has bumped up the value of our NBN connections and speed at which we enjoy our services from Telstra and other telecommunications providers. And he'll also explain why only houses are getting it and not people in apartments. Thanks for joining us, Luke.
Thanks for having me.
Okay, so this is an interesting one. I mean, we're not quite sure how we make money out of it, but we've got an NBN benefit that's been delivered to some Australians. Tell us about.
So ABN, the National Broadband Network, rolls out to just about everyone, depending on sort of where you live. They've been working quietly behind the scenes for a couple of months to boost everyone's speeds. If you're on 100 megabits a second, which is sort of the faster plan that a lot of people get, that's going to go 5 times faster. And while we're not quite sure how you're going to make money out of this one yet, you're definitely not going to spend more money to access it because they're getting it to people for free.
Yes, home-based businesses will be happy because they're much better quality. Their Zoom connections will be better as well.
Definitely. I think it's a big benefit for those businesses who, during COVID, decided to relocate out of cities and go to regional areas where it's a couple of quid cheaper to get yourself an office or work from somewhere nice like Byron, for example, but still have the speed you need to actually get.
Is that working, Byron?
I had no idea. I don't even know if there's people there. Yeah. I've been there a couple of times.
There are people there, but whether they work hard or not. With this thing, you're saying houses get it, but people in apartments don't.
Yeah.
At this stage, or is this like at the moment it's in the two hard baskets?
It's kind of in the two hard baskets. So what happens there is that the NBN is delivered through a bunch of different technologies, and we have Tony Abbott and Malcolm Turnbull to thank for that. Yeah. It's not, a fiber cable from the internet to your house. Instead, they're using a lot of existing cables. The problem with apartments is that they run on something called fiber to the basement. So they plug a big fiber cable into the basement of your building, and then the existing copper wires in the building connect everyone else.
Right.
Copper's not fast enough to get these upgrades, so those apartment users are sort of going to be left behind. If you've got something called FTTN, FGTC, or HFC, is probably going to be those speed upgrades for you, but not for apartment builders.
Does NBN purely work off cable, or does it have an impact on our Wi-Fi connections?
Yeah, so the NBN runs on a couple of different technologies. Like I said, it runs on cables that are running down your street or to a cabinet or to your apartment building. It also has wireless, so it runs on something called fixed wireless for people in the bush. And they've also got satellite for people who live really, really remote. They've got an Australian satellite they're called Sky Muster for now. In terms of your Wi-Fi, depending on which technology you're actually on, that informs the speed of your Wi-Fi as well. We've got some tips on Switzer Daily if you want to increase the speed of your home Wi-Fi as well.
I guess one interesting investment implication would be if there are businesses that can benefit from faster internet connections, it could have a material impact on their bottom line.
Oh, definitely.
It's not easy to find, but I'm sure that some of the analysts are probably working on it today.
Yeah. I mean, you talk about people like those that are working in Byron Bay, for example. I know someone who works up there with a video editing business, basically. And the only reason that they're able to do what they do from where they do it, normally they have to be somewhere like Sydney or Melbourne to plug into enough bandwidth because their files are massive that they send around.
Sure.
But now they're able to literally just connect to the NBN. Now their service is going to be at least 5 times faster and it's going to cost them nothing.
Okay. Will improve the television. Obviously television works off, I presume, Wi-Fi, but it's cable to the house or cable to the street.
Yeah.
So will we get less buffering? In country areas as well.
Everywhere that gets this upgrade is going to get faster speeds, which means better quality streaming.
Yeah.
Means faster games. It means uploading and downloading your work quicker.
Yeah.
So you can watch this show even faster.
Well, that's even better. Thanks for joining me. That's Luke Hopewell, the man behind the camera who occasionally comes in front of the camera. Excellent. And that was Luke Hopewell, one of our key operators in the Switzer group. That's the show for this week. Thanks for joining us. Don't forget, we would love you to become subscribed to the Switzer Report. There's lots of interesting stuff that might make you better at investing. And that's the whole point of the exercise. See you next week. Once again, thanks for joining us.